Okay, two things I want to show you. One is the levels that we have with the quick view and confirm to you how prices will be contained with these levels. And two, I want to show you how to do early detection because that can be very crucial to making those extra profits. First of all, let's take a look at today. 67.65 was a low that was set from the previous day. This is the day we're looking at now, but we've got a flush out. So we kind of back up to what we had the day before. 67.65. It's also confirmed with 67.65 here. And also it's showing up in our potential stops and limits 67.67. Now notice the 67.45 down here and the price channel at 67.33. Okay? Now, those two numbers, what's happening in the market right now? We've got consolidation. I mean, look at how long it's been channeling back and forth between this area, 67, 69, 67, 40, 44, okay? Those are the areas that was told to us in the quick view. Now, what's going on over here? It could be buying that's going on because they know these levels are down here. The industrial traders, the investment banks, they know it, and they're going to buy this thing up. And if that's the case, it's going to go working its way to the top. If this is just a matter of people covering their shorts, then it might fall back to the bottom. But we definitely can see how price is being controlled in this channel based on the levels that were given to us the night before. Now, that in mind, well, what do you do with it? Well, hopefully you were short from the beginning because you had early detection. Let me show you early detection. Early detection is when we'll take a day chart. Okay, let's look at this day chart. Now, in the day chart, you can see that you have this strong blue line. This was our strong trend. This is our original move. Okay, but as you can see, it worked its way up and it started taking off. However, the low of this candle here, this red day here, never got breached, so you have to readjust. Nothing ever gets breached. Now, if the low of today gets breached, we'll be looking at a new move to the downside in the day chart, okay? Because if it closes below this trend line, which I think it might unless something really crazy happens, and then it's breached, that's a new move to the downside, meaning that this move to the upside was nothing more than a correction. Now, how do we know before this? Well, we move to a 4-hour chart. In the 4-hour chart, we're looking at, there's that same blue line, and in here with the 4-hour chart, you would have followed this bump and run pattern, moving up hard, okay? And as the lows come in, but not breached, because here we were, this isn't a breach because this, let me show you, this candle right here was not breached by this one, which means we have to readjust to here. Then we got a green candle with a low down here, so we have to readjust to here. Now it's above it, green candle again, just to here. Now the close is still above it. Now we finally get a close below the trend line, but it's not breached, so we have to readjust it again. Okay, we're waiting for that low that closed below the trend line. This is not a close below the trend line. It was breached, but it wasn't a close below the trend line, so we have to move it again. And again, we move it here. It's not breached. Move it again. Until finally, here, the close is below the trend line at 10 o'clock a.m. on 9/25, and it's breached. There's the breach. See the breach? Right there. Okay? So, now what do? You start setting for an entry to go short. How do we do that? We use our Fibonacci tool. We go from you can either go from the low that was breached or the lowest low to the high. Okay? And what this is going to do is going to give you an entry point. The entry point, let's span it up a little bit so we can see these entry points. The entry point is going to be either at the 50%, 68.62, or actually this is going in the reverse. It should really be the 618, but I drew it in reverse so it came out 382, which is the opposite. But anyway, or 68.83. Short it either of those two places. Put your stop above this high here, or you can use, if you want to be more quick or scary about it, you can break the high of, say, this 75 or 25 here, 69.06. Either one, you wouldn't have been stopped out. You either one at 68.62 or 68.83. Now our stop on the quick view was 68, not stop, but our entry to short was at 68.73, which is kind of like in the middle of that. Okay, and the reason for that is because it was that resistance point that was the breaking point. Because here there was nothing agreeing with it. Normally we want this to agree with something, but we knew that, okay, 68.73, if it breaks too much past or go beyond the high 69.03, we know we're done. It didn't happen. So there was a small gain there from 68.73 to 68.57 on Friday. But now today it would be re-entered and refilled at either 68.83 or 68.62, and this is where we are now, down here. Okay, the short is confirmed. It's moved down. We had an early move to the downside. We grabbed the short early. Because if you were just doing the day chart, if you're just doing the day chart alone, you're not shorting yet. Because you haven't got the confirmation that you're in a shorting downtrend on the day chart. So this is just picking up a little extra profit a little early, as opposed to trying to go long way down at the 67, 65 area, thinking that you've got the bulls are back. Actually, because of the 4-hour chart that confirms to us the new move to the downside from Friday, tells us that when we get this signal bulls are back, we can obviously see, if you didn't recognize it before, you can see that it's not bulls are back, it's bulls couldn't make it. They made an attempt, but they couldn't make it. This has been bearish. I mean, look at the red. We haven't really had a lot of black going on, and even in the midst of the black, we've been getting moves to the downside in the price. Bulls couldn't make it, not bulls are back. So that early detection, using that part of your analysis by switching up those time frames, will help you an awful lot. If you're doing things like stocks or commodities that deal with 8 hours, from the 9:30 to 4, you want to switch to 1-hour charts as opposed to 4-hour charts with Forex, because Forex is a 24-hour market, so you have to have a larger time frame as opposed to the other, like the equities.